joining this chat, and you're probably thinking, who the fuck is this guy? Just probably met him on TikTok. My whole video completely went crazy on TikTok. I wasn't expecting that to blow up, but long story short, I started this group chat just to introduce myself a little bit. I started this group chat not too long ago. I worked on the New York Stock Exchange. This is my first job out of college. So I was a big professional trader down there, handling like millions and billion-dollar trades. Not billions, but like a couple, tens of millions of dollars at one point. I was trading on the firm down there for a while, and then COVID hit. I ended up getting sick and getting everybody else sick on the floor. So they ended up shutting it down completely for the first time in history. I have a little, I don't even know if I can show you this, but I have a little plaque up here. I don't know if you can see that. But it's literally a picture of me on the cover of the New York Times, and it says like the Dow ends 11-year winning streak, and it's talking about me shutting down the whole floor. So that's pretty dope. But basically, I work on the New York Stock Exchange, learned a ton about trading and shit like that. And then once I figured out that I could trade my own money, I was like, why the hell am I not just doing that? So I basically quit, and then I started with 3K, started learning options, started learning trading during COVID crash, and then use my experience from college and my job and all this other shit to start working myself up and start building capital up, and I ended up into almost $500,000. I crossed $500,000, I don't know, a couple weeks ago, 3 weeks ago, 4 weeks ago. Then the May crash and March crash kind of set me back a little bit. But I'm in between 400 and 500K right now off of $3,000 just last year. And to introduce anybody else in here, I have Drew as a professional trader. Drew's insane. He was actually a buddy I knew in college. He's a little bit older than me. He turned $4,500 into $2.2 million in literally a year and a half with the 20, just trading options. Options are unbelievable if you don't know what those are. Also trading cryptocurrencies now. He's actually killed it. He's turned $2,000 into $50,000 in 2 months just trading these cryptos. But that's an intro on Drew. Drew is he's like one of the best investors, long-term investors you'll ever meet. So if anything he says, he's probably right, especially long-term. So if you have a long-term horizon, look for anything he has to say. I signal anything on the intraday basis. I'll help you out with education. I'll help you out with any question you need, like whether it's like what the hell is a stock to like why does implied volatility percentage affect option contracts during earnings, anything advanced to very basic. I'm trying to keep this like very, very close-knit community, even with the fucking 400,000 views I got on that TikTok. I know I have like 900 pending messages. I've been sweating my ass off trying to keep up with all this shit. But I'm going to focus more on the trading now that a lot of people are coming in here. I'm going to signal a lot more. I'm going to help with the education a lot more. And anything you guys need, just let me know. That's kind of, I don't want to ramble on too much without like giving you guys like the Q&A and then like kind of going in with how the Discord goes. And then Logan is another guy that is coming in. He has a channel in here and he basically just scalps a lot. He's really good with economics and telling you like when the market's going to crash and shit like that. So when March and May hit, he was like the big savior of the group because everybody was losing money. And then he started buying puts and he made like 60 grand in one day, made 55 grand in another day. And then he turned $100,000 into like 750 grand within a month. It was actually one of the craziest things I've ever seen in my life. So I gave him his own channel. He's been teaching a lot of people about like bear markets and putting your money in gold. And now that the economy's deleveraging, I know this is probably a lot of gibberish shit, but if you watch that video I posted on the economic state, that'll really help you like understand what they should have taught you in high school and college. It's literally a 25-minute video and it'll blow your mind to how, if you realize how the economy works, all this ties into stock trading and options trading. But so that's a little background on me. Options trader, stock trader on the New York Stock Exchange. Worked on Wall Street for a year and a half, and then I quit. Start this, trade my own money, and then never really looked back. And then Logan turned 100 grand into 800 grand in literally a month and a half, just trading options on the side during the market crash of March and this past May. And then Drew is just unbelievable, a long-term investor. So that's kind of like an intro, like the traders we had going on here. And then I kind of wanted to open it up a little bit to any of you if you had like a question from then on, and then I can dive into like how the Discord is laid out, what we do on a daily basis, just so you're not completely lost, and then introduce you to stocks and options, where to get started, how to get set up, shit like that. So it's basically like an intro, informative stuff for all you new guys. But yeah, I mean, that's kind of me rambling on. So if you guys have any questions right off the bat, let me know.
Can you hear me?
Yeah, I can hear you.
Okay, so question. When you're trading options, I'm guessing the the most important thing is is it the volatility on there? Like when you look at the IV percentage?
Yeah. So, all right. So there's a lot that goes into an option contract, right? So a stock, everybody knows what a stock is, right? Everybody knows if you buy a stock, you have an ownership of a company. So if you buy something and it goes up, you're up. If it goes down, you're down. And then a lot of people are saying just invest in stocks long term, you'll become rich. But that's not exactly how the hedge fund managers or like how these big finance guys do it and make all their money. Yeah, they have a shit ton of cash, but they're actually using something called a derivative. And these derivatives are options, stock options and calls and puts. So if you buy a call option, you're basically betting on the stock price to go up. And if you buy a put option, you're betting on the stock price to go down. So you can profit on a stock going up and you can profit on a stock going down. And not a lot of people understand that you can make money on the downside. And it actually is a lot better. If you can see my chart right here, these huge drops is so much money if you bought a put on an option contract. So this is the QQQ. This probably from here, this 324 drop to this 322 drop, this $2 drop probably would have made you $400 to $300 to $500 within 15, 20 minutes per contract. So like basically an option contract is a calculation. So it's the stock price. It all determines on the stock price. So your option is going to go up based off of the stock price movement. So if you bought a call and the stock goes up, your option is going to also increase. But it's not just a part of the stock moving up and down. It's also a part of volatility, like you said. So it's multiplied by volatility, which is the prices of things going up and down in a really quick manner, also multiplied by time decay. And the time decay is like the theta, which is also a Greek. So it sounds like a lot, but it's literally a 3-part process. The options are calculated by the stock price times volatility, which is the prices moving up and down, and then the time decay. So the time decay is, you know how you can buy Expiration. So it'll expire either this Friday, next Friday, or next year, or whatever expiration. So the closer it gets to that expiration, the more weaker it's going to get, right? So it costs you money to hold on to these contracts. So think of it like an ice cube. When you first take out an ice cube, it's really strong and intact, but as it gets closer to its core, it's going to melt a lot faster. So that's like kind of like the time decay portion of an option. And then the volatility and stock price is just basically which way it's going. So if you're on the right side, you're going to make a shit ton of money. And if you're on the wrong side, you're going to lose money fast. But the best part about options is you can only lose the amount you pay for it. You can never lose more than how you pay for it. And you can sell them at any time to cut your loss quick, which is what I preach, risk management. And then when you're right, I don't like to be greedy, but I like to be patient with my wins, because when they're going up and things are in a trending market on the upside, you're going to make a ton of money. You can make 20 to 100 to 300 to 400% sometimes just holding something for a couple minutes, 20 minutes, 15 minutes, or even a whole day, or even a couple days too. We take long-term options, but this market's been kind of choppy. That's kind of rambling on, but I hope that kind of made sense.
No, it did. I mean, I'll let anybody else ask a question if they had any for that, but I have another 2-part question.
I mean, keep it going. Keep it going. What you got?
Oh, okay. Well,
I had a
so
question.
go ahead.
My bad. So how do you know, like, when to, I was looking at the puts and calls.
Yeah.
And as it goes, like the general stuff is the general stuff is, I understand it. The calls is when you bet on it going up, the puts you bet on it going down, but in that they're different. Like they got different like calls and puts you could do. So how do you know which one to do? That's what I'm trying to figure out.
Yeah. All right. So there's different dates, right? There's different expiration dates, and that goes by, the more risky you want to be. And then if you want them a longer term call option, they're going to cost more and they're going to be less risky. So that goes back to that time decay. The longer term out, that time decay isn't as much, and it's not going to hurt you for holding those contracts because you bought a higher premium to hold for a longer period of time. It's only going to start hurting you when it gets closer to that expiration date. So the difference in trading is, if you want to buy a short-term contract, you're basically going to be day trading that or swing trading that and almost being risky and like betting on the movements in the stock price. So one thing that a lot of people will learn in here when you first get is this technical analysis. So you see all these charts, it kind of looks like spaghetti, a ton of lines and stuff like that. It's not this advanced. It's pretty crazy. All these are called candlesticks. So they're up and down movements and they're different time frames. So when I look at this, this is my 5-minute chart. So each one of these candlesticks is showing me the stock price on whatever I want to see. This is my watch list over here on the left. And these are the stock prices of anything I want to see in a 5-minute time frame. So this is 5 minutes. This is the other 5 minutes. So this is 9:30 when the market opens, 9:35, 9:40, and it's showing me these price movements. I can also look at 1-minute charts, and it's showing me the price movements within 1 minute. And then I can also look at daily charts. Daily charts, 4 hours, 3 weeks. So this is showing me what everything is doing on a given day. So when you're talking about those option contracts, there's certain expiration dates. So if you bought a call option here on this big dip and you bought it for like a month and a half out, you can tell that the stock price is going up pretty crazy over here. It jumped all the way from 298 all the way to 337 up here. So this is a huge spike in increase, and you're basically betting the shorter term contracts. So these different expiration dates, if you wanted to buy a shorter term contract, you'll look at like the daily chart or the 5 minutes, and then those are going to be a lot cheaper because it's closer to your expiration date. So the closer that it is to expiring, the weaker the contract is, but it can still move. You just have to have, it's almost like betting on the price to break out or break down, and you use that by using this technical analysis. So it seems like a lot, but in the technical analysis tab that I have in here, it teaches you the basics of everything, how to get set up. I show you like what these lines mean, what these stock prices mean, and all the different time frames. So there's to answer your question, there's different ones because there's different time frames, and they're cheaper expiration, and they're more expensive the further away. But the further away they are, the more safe they are. And then you can bet on these stock prices breaking out. So if this is breaking down 4 days in a row, I'm probably going to take a call option on it because it's so beaten up that the stock is probably in distress and it's oversold. So when it's oversold here around this 299, I'll buy a call, and the very next day it's up to 313. You're probably going to make 400 to 500% on that option contract. So it's basically all comes down to that calculation with volatility, stock price, and the time decay. So the shorter term contracts are going to be a lot cheaper, but a lot riskier.
So okay, so if I buy it for a longer time, it's more. I'm paying for more for safety.
Yeah, you're paying for safety, but you also have to keep in mind that the stock market could tank on you at any point. So a lot of people, I've noticed, if you were holding a stock long in March or an option contract in March, when everything started falling pretty crazy, like you could see some of these stocks. I'll even show you one right now. Skills. I was holding an option contract long for all the way at the end of the year. It was a $20 call, and I got in pretty early. I got in around here. It was $18, and it started going crazy. They got a partnership with the NFL, and it started jumping insane. It got all the way up to $46, and I was up. I think I had 10 contracts, and it was worth $2,000 at the time for me to enter, and I was up like almost $8,000 just holding it for about 3 weeks, 4 weeks, and I was up almost $8,000 off a $2,000 investment. So I was up 400%, 300%, and I was up a ton of money. And then I started taking some profits off the table because I was like, this is pretty overextended. It started jumping from 11 to all the way to 46. So I took some profit and I held some. But even when I held some, it started getting absolutely hammered. And I went all the way back down to $12 because of the market sell-off, and a lot of like the interest rates raise is fearing a lot of investors in the economy, and the technology sector just got completely destroyed. There's a lot of factors that I can explain longer term, but holding out that longer term doesn't mean safety. It protects you from the theta or the time decay. You just have to be careful holding on to something, because if you're holding long and it's coming down $30, you're going to lose a lot of money. So that $8,000 I would have been up, I probably would have been down. I mean, $10,000 down almost everything, because I had a $20 call expiring at the end of the year. Now it could come back, but that's a lot to recover from 46 all the way to 12. You know, does that make sense?
Yeah.
Question: what do you think is more with like a smaller account? Would you is it more recommended to swing trade or day trade? Because sometimes I feel like when you swing trade and you get a good, like a nice setup, it has potential to like honestly double your account size just off of like a little bit of money invested.
Yeah. So when you have a smaller account, that's a good question. So you're not going to want to buy longer term options when you have a smaller account, because the goal is to really build yourself up to make you have more money, so you can, play with a lot more. Money makes more money, and it just continually snowballs into a greater amount. So I personally, in this market, it changes. Sometimes there's a swing market, and there's sometimes where there's a day trading market, and there's sometimes where there's an investing market where if you hold long, you're going to make money almost every day when the market is completely bullish. But in this market, I would say when you have a smaller account, it's almost better to day trade as of right now, unless things are, they have a catalyst of earnings coming up, or if they have some news coming up of an event, like if Tesla has a car event or they have numbers coming out with like the deliveries of vehicles, or NIO has something like that. I think for smaller accounts, it's better to play, not swing trade, but give yourself some time, like maybe buy something like a week or two out for expiration dates to really kind of build that capital up. So, and one thing that I've noticed a lot is that, I don't know if you saw a couple of my TikTok or any of my pages or anything, but there's this one trend that I've been playing a lot, and it's called the gap fill. And that's been paying a lot of money. So if you buy them and you buy weekly contracts that expire that week, they're usually pretty cheap. They're under like, sometimes they're $400, sometimes they're $300 a contract, sometimes they're $16. We bought a couple option contracts that were $10 not too long ago, and they turned into $60 a contract. And FSR, I can actually show you an example. I'm not just talking.
I was just gonna ask about FSR. That's so funny.
Oh yeah, a lot of people talk about this.
FSR is Fisker. You guys might know that. It's another electronic vehicle company. And as you can see, this is my daily chart, just so you know. So this happened, I think this was last Thursday. What is this? What's today? Tuesday, Monday, Friday, Thursday. Yeah. So Thursday, the stock price was trading around 996 at close. And then they had a jump. They had a partnership deal the next morning, and they were jumped like 15%. And the stock was trading at like 1168. I was like, that's not going to fill. That's not going to stay. So there was this entire gap like separating this close price at 991, and it opened up around 1158. So we bought puts because it's been a huge trend in the market where if things gap up like this, they usually fill the market down. So we bought right at open, we bought $11 puts, and this fell $2, and that $10 per contract turned into like $60 per contract. So it made 600% within like 35 minutes. It was insane. And so I think right now the best time is to day trade. So if you had a $200 account and you put it all, and you were risking it all, say you wanted to try and double your account, that $200 could have made 600%, made you $1,200 within 30 minutes. It's all about volatility in the price of the stock. I can actually show you this is the 5-minute time frame. So if I go back a couple of days, I'll show you where it actually started selling off. So yeah, this is some of my analysis. You'll see these yellow lines I was looking at yesterday. So it gapped up and it tanked as soon as the market opened. And then I bought in at this jump up because this was super bearish, and then it continued to fall, and then it continued to fall. And then there was no buy pressure, as you can see here. This is something called a TM squeeze or TTM squeeze. I'll teach you guys all about this technical analysis if you guys, we can hop on another Zoom call and go from the very basics, but there is a technical analysis tab just to get your feet wet, and then I can answer any questions to go on. But anyway, there's a lot of selling pressure in the stock. So I bought it right here after it dumped it open, and I just rode those puts, and they were only $10 a contract. So I bought quite a few of them, and I rode $10 all the way down, and I think I sold them right around this price right here at around 1087. I wish I would have held them a little bit longer, obviously, but I'm going to take profit because I was up about 400%, but I could have ended up making 600%. But that $10 a contract could have been $60 a contract, and if you buy 10 of those, 20 of those, 100 of those, you would have made a pretty good amount of money. So I think that day trading or swing trading, it doesn't really matter. I just kind of call out the opportunities as they come, and it's not like they're all expensive options, because this one right here was $10. So you can make money in any market. But I would say if you're trying to build something, I would day trade a little bit and then start using your day trading profits to swing trade. I would never use your upfront capital to start trading until you start building up a lot more capital in your account.
Okay. So how do you look for these type of, I guess, plays? Is there like a scanner you use, or how do you? Okay, go ahead.
No, go ahead. Keep going.
Well, yeah. So currently, I'm trying to just build my small account. I put in like 300 because I saw it in the comments. If a guy did it with 300, I was like, shoot, let me try and do it too. I'm pretty familiar with options.
Yeah.
But I think I have a problem with risk management. I'm also like kind of good at like reading charts. But I'm open to like learn new methods.
Yeah. Sure.
But with that being said, how do you find like these options, like more so on a smaller scale? Like I've been trading a lot of ETF SPY lately, just because I'm kind of like today I knew it was gonna be like, well, I didn't know, but I had a strong sense it was gonna be a put. I used like 200 day. I was using this like 3 lines, 200 day MA,
Yeah,
the 51, and then I think the 21. So like short term, midterm, long term.
you're probably using the
Um,
55, 21, 55, 200, right? Or what's the
yeah,
yeah. Yeah, so I
yeah,
have them up right now actually. These are what they are. I also use these Bollinger Bands, which are the stock price kind of stays in between them. So like all three of these blue lines are called Bollinger Bands, and they like to
Mhm.
trade within these range. So if they're outside of them, they're gonna more than likely come back inside. So that kind of also helps me determine,
Okay.
which is really nice to see. Like if it's bouncing outside of it, you can see it's gonna bounce back in. Shit like that. So these indicators are really big, and they help you with where the stock price is gonna go. And then once you get good at this is going to help you increase yourself as a trader, and you're going to make a ton of money as well. But I have a lot of these indicators set up, and I have videos showing you how to set them all up and how to read them too. Looks like a lot right now. But to answer your question, I find these stocks by like I use an abundance of things. I use like CNBC on my phone if there's news out. I use Twitter. I use stock twits. If you search Twitter with just the dollar sign, and then whatever stock you want to look at, like $ Disney, like DIS, you'll see all the latest stock news from it, or a lot of like tweets. A lot of people tweet about them. So I use stuff like that. I have scanners, and I also pay for this program, and I still have a program from being on the New York Stock Exchange that pushes me news and stuff like that on different stocks that I set up for the algorithm to push to me. That shows me like different upgrades, if the stock got downgraded, upgraded, if it's a neutral rating, do they have earnings this week? It's just basically like keeping up with a bunch of stocks. So if you make a stock watch list like this, over here to my right, I have a ton of these stocks. Trading the SPY isn't a bad idea because you have so much liquidity in those. But like trading different stocks, like Square the other day, I mean, look at Square. Square was crazy. If I show you Square real quick.
Go from
yeah. Trust me, I got clapped on the square. That's one of the reasons my account low.
I got pretty beat up on Square after their earnings report too. I had too many shares, but basically, Square had this like they got sold off, and this earnings report took them to 205 to 221. But I was sitting here betting on Square the entire time that they had earnings because I knew they were going to kill it. Looking at their fundamentals and just being a finance major and being kind of nerdy with like learning all the ins and outs, like their balance sheet, income statement, all that stuff. So I do all this analysis and then I post it into the stock group. So it's not like I'm just like guessing on these stocks and like taking positions because I think they're going to go up. It's all based on technical analysis, their fundamentals, all their news that they have coming up, and just things that are going to move the stock price. And just having that experience, because for trading for 6 years now and being on the New York Stock Exchange and seeing like the order flow of how things come in and the sell side and the buy side, and if there's an imbalance and things, like I just kind of know like where stocks are going to go from watching them for so long. So that's kind of how it just, I guess it comes with experience, but it also comes with like having a lot of things that you can read within Twitter, CNBC, and then just knowing different sectors of the market. So if retail markets are coming out, you should watch that Ray Dalio video that I showed you. It'll really help you out, like understand the economy. So if like interest rates are about to raise, or if the economy is doing really well and people are getting like, there's job reports almost every week or every other week. And if the job reports is really good, that shows you that the economy is getting better. And then that's going to hurt the tech sector, because when the economy is getting better and we have zero interest rates right now, the inflation is only going to raise. So if inflation is getting higher, growth stocks and technology stocks are going to go down because it's going to become more expensive to use their technology and stuff like that. So just knowing the different reasons like that's happening in the economy is what's going to happen. So the QQQ tracks all the tech sectors. So anytime you see inflation rising or the job market increasing, you're going to see all the tech stocks go down because inflation is rising. So there's just like, there's different things that you need to know about like that kind of stuff that can kind of determine which way things are going to move and which stocks to play on the call side or which stocks to play on the put side.
Oh, okay, I like that.
It's a lot to unpack, but I promise over time, if you just continually watch it for even like a week or 2, 3 weeks, you'll pick up on it pretty quickly, especially because we have guys that'll constantly remind you.
So basically, as economy grows, the tech sector gets clapped.
Yeah, well, as of right now, just because the way our economy is at right now. Watch that Ray Dalio video I posted. I'll post it again just so everybody can see it after this.
The one with where they talk about deleveraging.
Yeah, deleveraging. So our economy, in my opinion, is going into a deleveraged state. So with all these asset prices going insane, the housing market into a bubble, a crypto bubble, we're almost in like a euphoric state. So they're starting to deleverage, and with inflation getting higher, the only way to counter inflation is to lower interest rates. But we are at 0% interest rates, so it's almost impossible to make a negative rate. It is possible, but our Federal Reserve is not going to do that. So they're continually printing cash, and we're just increasing inflation. So once there's all this inflation, we're not going to be able to pay that much money back because we can't balance it out with lowering interest rates because we're at zero. But we're continually printing money. So the economy, and not to scare you guys, and it doesn't really matter because we're going to be playing puts the entire time and making money off of it. But there is going to be another stock market crash, and it's probably going to be relative to 2008 stock market crash. And the SPY, things are going to probably correct down 20 to 30%. There's going to be a huge crash like there was in COVID last year in 2020. And it's coming. It's definitely coming, but I don't know when it's coming. Probably.
How long will it last? Do you know? Like, how long do you think it will last?
Probably a couple months. I say it would be. I think things will be sideways. I think you'll see big red candles like right here, all like pretty similar to it was back last March 2020. And I think there's going to be a nice correction. Then we're going to enter a bear market territory, and then it'll just, like every other time, it'll hit a nice level. It'll start leveling off, and then you'll just see a rapid growth of buying. So those huge tanks are great opportunities because you can make money on the downside for puts, and then when they start turning, use that profit for cash to take longer calls and just ride the wave up. And it's just rinse and repeat. And the best part about knowing how to trade options is that you can make money on it.
So as far as you might, of course, it's kind of hard to tell when I don't know how to ask this, but the market crash, it's kind of hard to like gauge when it's going to happen. But as far as like just short term, you still see like, are the Bulls still in power here?
No, I think it's the Bears right now. They're kind of leveling off on a lot of things. Like small caps are completely taking off. Tech sector is really beaten up. SPY's doing really well, and the Dow's doing really well because a lot of investors are storing their money in safe companies like Verizon or AT&T or McDonald's or Dollar General because those are pretty safe investments. But those will start to get hit too in a crashing economy because people are going to want to get out of the stock market and go all cash. So what I've been doing recently is I haven't had a lot of people in this Discord channel kind of miss it, and I do too, is being able to buy an option for like a couple months out, sit on it for a while, and then, make money in a couple weeks because the stock market's so bullish. But right now I'm mostly cash because, things are so volatile that I don't want to just sit there and lose money because it's so uncertain in the market. So I've just been like trading every now and then. The first hour and a half in the day, I love to play because there's a lot of volatility. And then if there's any earnings news or anything, I'll start playing some of that run up. But I haven't really been taking.
So after SPY today, where do you foresee it in like the near future in general?
Well,
Because I was thinking, I was like, man, if this doesn't hold like a certain level, which I think 415-ish was the level for me that I had to break or kind of stay above for me to like be still bullish on it, but then it just got.
I mean, it was the tax raise that Yellen said today. She's terrible for the market, but basically this bottom of this thing right here was its support line. It ran right through it, and it ran right through this other support line. So we could see 411 flat tomorrow. We could see 410, and anything below this 410, I wouldn't be surprised to see 407 all the way down to 405. And if we break 403, it's going to start getting in sub 400, which is going to be pretty bad for the market. So right now, this isn't showing me anything because knowing some trends on stock patterns, this isn't going to see anything. And I don't think that we see above 402 anytime soon. Especially
above. You kind of cut off at that point. What was the level?
The level is 422.80. I don't think we see anything right here because we broke down this support line. I think that we actually do test a lot lower, maybe around 410. Anything below 410, I think we could see 407, and then anything below 407. This huge support line here is 404. If we get below that, it's going to get really ugly for the spot.
So you looked at it and made a pretty quick analysis. What do you look at for the levels? Like, I mean, volume obviously too, but like, what else?
So then it's just like me watching stock patterns for a long time now. But I look at like most recent prices, like where things close. So this is my daily chart. So this is what happened a couple days ago, and it bounced off of the support line at 404 at this bottom of this wick. So at this bottom of this wick, there's a lot of buyers coming in, and it's bouncing here. So this is where they found that fair price, this pair off at the end of the day. So this bottom price right here is 404. And if it breaks below that, you can see there's a huge gap fill on this on its history in this historical chart, like a couple weeks back, from this 404 price all the way down to 400. So that $4 move is going to be huge. And then below that, it's 398. So it's just like looking at historical price patterns and determining support and resistance. Support being bottoms where they'll fall lower, and resistance being higher is where they'll go higher. So if I draw a line right here at this very top at its all-time high, that would be a resistance. And things below, I don't know, like we'll say this candle, things below this candlestick at this 418, this would be a support. So if it's bouncing in between this and it breaks through this, that means it broke through resistance. And if it breaks below this, it breaks through support, and then it'll try and find a bottom headed lower.
Got it.
I'll enter calls and puts based off of its breaking resistance or support lines.
Ooh, based off, okay. And then I'm guessing just put a tight little stop loss. Got it.
Yeah, and my parameters are minus 15%, I'm out, and then plus 25%, I'll start taking some profits or trimming off the table whenever it starts hitting those resistance or support lines.
What's a good percentage to pull out and to get profit?
I always preach that my parameters are plus 20%, plus 25% on a trade.
On a trade, okay.
I'll start trimming some, and then if I have more than one, I have a couple, I'll probably let some ride. So if I have 10, I'll probably trim 7, let 3 ride for free, and then just free money on the upside. And then if they start reversing on me, I'll just cut them right away.
So with a smaller account in mind, it's kind of, I mean, depending on which contracts you get, it's kind of hard to get like multiple. Is there like a how can I ask this? Like, because I'm also trying to account for risk management. I mean, or how would you risk manage a $300 account? Would you just say like just get like a really good setup and just look to like X or 5X your money? Or
I've done a couple $300 challenges in here, and basically how you risk manage that is you use your day trades and just trade it, and like if it goes up any money like 30, 40, 50 bucks, take it. You know, just take that $350 and then you're at 350, and do that like 4 or 5 times real quick on the right side, and don't let yourself go down the hole. And then when you make 4 or 5 profitable $50 trades, next thing you know, you're at $600, and then you can start putting on a little bit more risk. So when you're building a smaller account, you should buy in and be in real quick, in and out. And then if it's right, like who cares if you made $30? You made $30 out of thin air, and then 10 times you make $30, that's $300, and next thing you know, you have 600, and then just continually start risking yourself a little bit higher, a little bit more, and then staying true to your parameters of minus 15 and then plus 20%. You can start building and expanding those parameters a little bit more when you have a little bit of money to work with. But to build an account, I'd be in and out quick, especially when you're signaling something to break out. So if there's something like this, we'll just say this is like a 5-minute chart. This is a support line at 416. And if it breaks this 416 chart, like it did right here on this third candlestick, it breaks right here, jumps all the way to 417. You probably made a quick, 20, 30, $40 on each contract. Might as well sell it real quick. Just keep that profit rather than getting greedy. And then just do that 3, 4, 5 times until you build up a good amount of money to start building, a larger account and risking more money to make more money.
so when you're building up a small account, would you recommend on a trade, would you buy like further out of the money contracts for cheaper, and then looking to trim and like go ahead? Or how would you do it? Like I don't know how to ask it.
No, I feel you. I like to buy closest to the strike always. So then theta doesn't kill me if it goes away on me. Because you could lose 100% on a trade if you're buying something that's only worth $10 far out of the money if it goes the other way. So, but I like to buy closest to the money, or if it's like a little bit above it. So if it's a $50 call, I wouldn't.
Yeah.
But there's some people joining, but I didn't realize that I didn't do this as an unlimited time. So if it cuts out, I'll create one more Zoom for you guys. But I don't want to take too much of your time. But does anybody have other questions? Do you want me to dive into like how the Discord's laid out? Do you want me to dive into anything else, like many more basic things, anything I haven't covered?
I mean, definitely probably go over how the Discord's laid out. Basically just how, day-to-day routine, waking up, what's the talk of the morning, basically on how everything's broken down throughout the day.
For sure. All right. So for you new guys, the welcome chat, I got the welcome chat where it comes in and it basically just tells you can click on any of these. So the welcome chat is beginner's guide. You can click the beginner's guide and it'll take you right there. I got the directory where it can tell you like where each one or what each channel is doing, like the announcements is telling you where it's all at. So it's kind of like a nice directory up here. Some of them are outdated. I have to update them, but they're all the same. The disclaimer, of course, basically just saying that none of this is like, I'm not advising anybody to take all my trades. I'm just simply signaling them so you guys can see what I'm doing on a daily basis. I'll always give you an explanation on what I'm doing so you can so not only do you know what I'm trading, but why I'm trading it and my thought process is on. So you can learn that way in a much better way. Announcements, I'll always post on a weekly basis, like what the market is coming in. So taxes are due Monday, which is key because you can pay to people are selling off. Federal Reserve will speak, which will help CPI numbers, which will show you inflation numbers. So if inflation is high, tech stocks will come down. So I'm basically always showing you what earnings are coming up this week, what kind of data we have to see, and all this other stuff. So I keep you up to date on stuff that you're going to see this week based off of how the economy is reacting and how the stock market will react. So that's announcements, just basically important shit. And Scott Snipes, this is where I signal everything I do in my analysis at night. During the day, I keep it kind of brief, and I only show you what I'm buying and what I'm selling so you guys can't like get lost in it and you don't get stuck. But at night, I'll like show some of my analysis and stuff I see on Twitter, stuff I see on some of my news feeds and shit like that. So that's that. Logan scalps. He does a lot. He does a lot of like quick scalp trading and stuff like that. So if you're quick with the market, he's also really good with the economy and showing you like different metals and stuff like that. He's been trading a lot of gold and copper, making a lot of money just because a lot of people are moving their money into those. So you can trade options on those safer stocks as well. Drew's wisdom, the genius.